Today, hello friends, hello traders. Today we will see how to take an entry in the gold, how we can analyze the market and then take entry and the exit, and what are the rules and what is the mechanical process for doing this. Before going to that, I have some separate rules, a mechanical process, how to take an entry. I will show you. See, whenever I want to take an entry, I have a separate set of rules. These are them. First, I will see the trend in 1 or 2 hours time frame. If I see in 1 or 2 hours time frame before entering this, it is fully bullish. Today, 6th May, it is fully bullish. Fully bullish. Then area of the price, whether it is in the demand zone or supply zone. It is in the supply zone. Supply zone. It is in the supply zone. Area of the price, whether it is in at the discount or at the premium. Normally, we know the concept. We know the concept, whether it is in the discount or at the premium. Let's say this is the area, and if you want to draw one line, 50%, this will be the premium area. This will be the discount area. This will be the discount area. This is a general, this is the basic funda of the price, whether it is at the discount or at the premium. Now, coming to the 5 minutes time frame. I usually see these rules and then the time frame and how it will be and all. If you ask me here, the price is at the premium, and here itself we can see all this, and volume profile also have to be checked on. If you look at this volume profile in the 2 minutes, 2 hours time frame, in 2 hours time frame, it is in the high volume node. I want to show you this, that it is in the high volume node. It is at the high volume node. This is the high volume node, and it is about to reach this level and then to take the liquidity. So this way I can say this is at the high volume node. Next, is it in the session? Which session? It is in the New York session. I am taking entry at the New York session. Let's say here whether the volatility and the volume will be, what is the range of the volume and the volatility? It is high because New York session, at the New York session, when the London and New York overlap, the volume and the volatility will be huge, huge, huge. So this has a huge, I mean, huge volume and the volatility. And I will be always linking this with the Wyckoff theory. Wyckoff theory. Always I link with interlink always with the Wyckoff theory. And the change of character and everything will be, we will be checking it. I want to go with for the 5 minutes candle. Now if you look at this is in the supply zone. This is in the supply zone as we have seen in the 2 minutes, 2 hours time frame. It is in the supply zone, and the timing I want to see here in the 5 minutes candle. It is in the 5 minutes candle. I want to see the volume also here. See the time. This UTC plus 5 hours. It is UTC 5.3 hours. I will show with sessions. I will show this session. Looks up. If you see this, New York started at 8:30, 18:30, which is 6:30 Indian time, and then 8 o'clock, which is a New York open time. This is the New York open time, and it has come all the way down, and it is it wanted to push the market up, and this is the little resistance zone, I can say, and it is pushed. But well, if you see here the candle, this tried to push it, and once it is broken, once this what is that? Once it is broke out, the volume candle which is more, and then immediately after that, little size of the candle, but the volume almost similar. If you see here, almost similar, and it is not creating any new high, though it is went up and it is not able to create any new high, which means the price is started reversing. I can even say, looking at this itself, based on rules, I can say the trend in 1 or 2 hours time frame, it is in the bullish time, and the volume is huge during the London and the New York overlap, and it is in the supply zone and the premium, and it is at the high volume node. Looking at these three, I can say the price probably reverse, means there is a 60 to 80% chance that the market will reverse, and I am linking all this with the volume and where to take the entry and what is the confirmation that it can reverse. If you see, this is the New York at the 8 of, New York open, it is low created, and this is the one. If the price still it is bullish, then it should have continued the trend and it should not have reversed back till this day, till this price 4747. It should not have come down below this price. And I can say this is the change of character. This is the change of character, I can say. So when price is started reversing, and if you see the volume candles, you see the volume candles, you see volume candles are increasing, which means sellers are taking the control of the market. Sellers are taking the control of the market, and it is change in the character. And all these have given the confirmation that the market is now going to reverse now it is reversing the market. But now, where from where we can take the entry, and just below you just see, and it is come all the way down till here, and the price has reached again to this first point. So you just have to wait for your reaction again. Always market will give you the second chance to either take the entry or to take the exit, to take the entry or to exit the market. So it is come this so much bullish, so much bearish, and definitely this is the price elasticity of the demand says always it will have a pull back and then push. There is always pull back and then there will be push. So if you see here, it is pulled down, and here there is whatever liquidity is there, it has been taken. Once the liquidity has been taken here, let me draw a line. Once the liquidity, whatever is there, when it is taken and it started reversing again, which is again pushing back all the way up to here, and where we can take the entry, I can say this is the next point here from here. This is the next point. Next low you can take right when it is started reversing. How I can say this is acting as a resistance again. Once it is broken down, once it is changed the character, this is working as a resistance again. So if price is not pushed back to this area, above this area, it is not pushing. So you can say this is acting as a resistance area. Until what you can take the entry, how you can take the entry, I will show you. I want to take a short entry from here, having a stop loss at this price. This is the What is that? This is the next high which is created. Though after reaction of this liquidity taken, it is a reaction till what I can take next till next level of this liquidity. I can say till this, or if you want to more conservative, then you can take up to here. So it which is giving around 1 is to 2.4, and it is a which is a good risk reward ratio, and it is having a $15 move down, $15 move, so which is a great opportunity in this, great opportunity in this. This is my stupid strategy for taking the entry, and how much risk size, lot size and all that you have to decide depending upon your capital size. Thank you. Please subscribe my channel.